Hello everyone and welcome to Fluent Financial's What You Should Know for the week of May 16th. My name is Mike Lanise and I'm the Portfolio Manager at Fluent Financial. This past week we had a strong relief rally on Friday, but that wasn't enough to offset another significant leg down for U.S. equities as inflation pressures continued to weigh on risk assets. The NASDAQ, the S&P 500, and the Russell 2000 all lost around 2.5%. All but one S&P sector finished negative, with 3 to 4% losses in consumer discretionary, real estate, financials, and technology sectors. Treasury yields eased on the long end as investors finally sought refuge in traditional risk-off bond holdings. The 10-year U.S. Treasury yield is around 2.87% mid-morning on Monday after reaching over 3.13% early last week. Tremors in the cryptocurrency markets added to volatility this past week, with Bitcoin plunging as much as 28% before cutting losses in half after one of the so-called stable coins that is pegged to the US dollar, called Luna, collapsed, becoming nearly worthless. Bitcoin held up better than most, but is now down over 50% since the November peak, despite decades-high inflation. Hopes for peak inflation were dashed after April's Consumer Price Index report, or CPI report, showed an 8.3% increase year over year, which was above the 8.1% estimate, even as energy prices declined. It is important to note, though, that 8.5% was the previous month's reading, so we may be turning over at high inflation rates. Producer prices, or PPI, rose 11% year over year, and this was above the 10.7% estimate, but also down from its high last month. Inflation concerns dragged consumer sentiment in early May to the lowest level since 2011, while small business confidence held steady in April after 3 straight months of declines despite high prices and worker shortages. Internationally, OPEC cut its growth forecast for global oil demand based on the war in Ukraine and COVID restrictions. Crude oil bounced back from early week losses to finish nearly flat. Year to date, the Dow Jones is down 12%, the S&P 500 down 16%, the Russell 2000 down 21%, and the NASDAQ down 25%. Looking to the week ahead, with the S&P down nearly 20% from its peak and the NASDAQ off to its worst yearly start on record, investors are searching for signs of capitulation. Sentiment has been bearish for weeks, and volatility or fear has remained stubbornly high, but without the signs of panic typically seen near lows. The unrelenting interest rate ascent has slowed, but weakened seasonality going into summer, and technical trends are poised to be market headwinds. This week is a busy economic calendar, and you also have a series of Fed speaking appearances. Consumers will be focused on the April retail sales report Tuesday and earnings releases from giants Walmart, Home Depot, and Target throughout the week. The beleaguered housing market will deliver updates with the NAHB index on Tuesday, housing starts on Wednesday, and existing home sales on Thursday. Feel free to leave comments or questions to this post. Click the like button and share it if you felt that it was informative. Subscribe to our YouTube channel and visit fluentfinancial.com on our website for further information. As always, thank you for tuning in to What You Should Know, and have a great week.